Hey everybody, welcome to the live stream tonight, Sunday, October 21st, 2018. Let me just post this link up on Twitter here. Kind of getting started about a minute early here, but pretty excited. Just wanted to go over a couple different things. Wanted to start, basically, Friday was an interesting day, so Friday ended up once again right around the 200-day moving average. But look, it's one of the things I was tweeting a little bit over the weekend is that we've basically tested this once, twice, and then we'll see if we go a third or fourth time here. If we break down that fourth time and don't hold, oh, I'm sorry, this is the 200-day right here. I added the 250 the other day, so we had what we got. So 1, 2, 3. I mean, they've actually tested it a bunch of times. So 1, 2, 3, 4, 5, 6 times. So this has just been so much indecision. I was looking at it earlier. It looked like it was like only hit 3 times, but oh my goodness, it's hit like almost every day. So eventually it's going to get off this, and who knows which way it's going to go. There is a possibility. There's 2 directions. I mean, right? I mean, it could really bounce. We could get a bit of a rally. Last time it attempted to reclaim this bar here. So there's a chance it could go, and it could hit a new high and then keep going or turn over, or it could break down. I think a lot of people are thinking it will, so that's another thing to keep you on your toes. If everybody is thinking short this market, there's a chance it might go up. Here you can see futures are down. Earlier, I think I tweeted, the S&P futures were down 15. And now they're back down 8. So, I mean, who knows what this could do overnight. I mean, look, it's already creeping back up. So we'll see what happens. We didn't have a whole bunch of positive news this weekend, but I guess there wasn't a whole bunch of negative news. So who knows? Who knows what's going to happen? But I just kind of wanted to jump in, take a look at Goldman Sachs. This is on my radar because, as everybody knows, I love trading double inside days. They're just very consistent, intraday. And they could, if the market had a general direction of going up or down, they could be consistent swing trades too. I've shown examples in the past of Costco, CVS, other double inside days that after it broke to the upside, I mean, they continued, 10 days for huge gains. I mean, if you got basically at the money calls the day they broke, 10 days later, I mean, they were like 10 times as much. I mean, there's a lot of potential there. But now in this market, we've had so much chop. And days you think are going to go up or going down, it makes it a little bit harder to swing. But there's certainly some intraday trading activity that you can do on the double inside day. So Goldman Sachs went inside a second day after significantly good earnings. You can see here, they're expecting 569, and they came in at 628. Of course, they had a good day, and then they had a good follow-up day, and now it's consolidating. So on a shorter time frame, right, that's going to look like a kind of a bull flag, or even potentially a pennant type look. So that has me leaning, towards the bullish side. Obviously, it can do anything it wants to. I do like how the 5 MA just crossed over the 20 MA. So that's kind of leading me to think, hey, we might get something. So honestly, all market sentiment aside, if we gap down tomorrow, and for whatever reason this thing gaps down below the range, that's one of my favorite setups to go long, at least because if it doesn't gap down much, your stop will just be whatever that low is before it breaks into this range, and you go long as soon as it breaks in it. Your first target is halfway through, or basically it's the halfway mark. You could either get all out there. I mean, the range of this bar was 411, so if you even got halfway, you make 2 points right there on that. There's a chance it gaps up, and you could trade it to the downside. But again, like I said, I mean, this is a pretty bullish chart right here. And so if we do end up gapping down, you can set a first target 50 cents, trim some, and then see if it goes any higher, and you can get the rest of it. So you could end up making 3 points tomorrow on Goldman Sachs. Keep in mind the other 2 scenarios, of course, is if it opens in the middle of the range, right? I'm going to go to the hourly chart here. On my hourlies, I use Thinkorswim. It's got a built-in, you can see I have the range of the previous day. This is one way to see you went inside, because this bar is inside this bar, is inside that bar. And then, let's see, this bar is inside this bar is inside this bar. And so that one is, that study is, I think it's like high-low. yeah, daily high low on in Thinkorswim. It's a built-in strategy, and so you could just, I colored mine green for the top, red for the bottom. But anyway, you can see here, if we zoom in, you know, the purple is the VWAP, right? The bright green is the 5 MA, and the bright yellow is the 20 MA. So if we gap up, no, if we open in the middle of the range, right, then you use VWAP as your guide, right? And of course you could use hourly signals, which I like to do. But let's say we gap down a little bit, not all the way outside of this bar, but say we gap down here. What I would do is, you know, look for some sort of maybe lower time frame setup or an hourly time frame setup where you can get above the VWAP, and you know, here's, say right now you're at 226, and then you go all the way up to 228, so you can get a 2-point move off of that potentially. Again, on these it's tough because if it gaps above the VWAP, you know, again, you could short it if it goes below, but you got to be careful on those. You really want to use your hourly setup. And so what I like about the hourlies is that at the open, at least, you have an inside 60-minute bar that you can use to gauge that. So, and this is kind of a, you know, it's obviously a bearish bar, and on the hourlies, here the 5 MA is curling this way, right? And so, but also at the same time, the VWAP is curling, you know, above it. So it's sort of a point of indecision, but you know, this inside shooter bar closed right on that VWAP. So let's say we open down a little bit. I never chase gaps, right? So what I would want to do is see that price kind of come up and see what it does with this bar, right? And so if it comes up kind of halfway-ish and then comes back down, that might be a shorting point on the break of that. You might want to give it a couple times to attempt it. Now, if it breaks this bar, that's a long to me. So over here, over 227.49, you know, I would take that long if we started down here, right? You could attempt, if you're aggressive, you could attempt to trade it into that bar, but again, there might get some, it might just come up a little bit and then come back, and then really come back down. So you just got to gauge that, right? And so if you can get some sort of solid bar here, if the market's really weak tomorrow, look at that, see, futures are already coming way up. So I mean, this thing could be good tomorrow. So now again, if the whole market's bullish and it's gapping up, you can't chase the gap, right? So, you know, you'd have to watch the futures, see if they're coming in, and maybe try to trade it to scalp it to go halfway in the range, right? So anyway, but I would also look to see breaking this, because it could be a failed shooter to the upside. So it'd be 227.49 with a first target of, again, 228.30. So that's 1 point right there, right? And then it could take out this bar and then that bar. So if it goes all the way to take out the mother bar, it'd be 228.90. So that's almost 2 points right there, just trading off of this inside 60. So that's Goldman Sachs for tomorrow, definitely on the radar. I did want to kind of review a couple trades from Friday. I'm starting to just kind of call out trades that I'm in a little bit. I'm trying to get a system down where, you know, folks can follow along and kind of, you know, see what I'm up to intraday. If I call something out, I'm going to put what my entry is and my stop is, so you know where I'm at and where, you know, where I'm at. And then I would update probably, you know, targets, but you know where my targets are. I mean, they're going to be taking out prior hourly bars. If you remember my game plan from the other day, on Friday, you know, AMD, well, AMD is kind of a go-to, right? Because it's, you know, it's fairly priced stock. You can buy shares, and or you can do options, right? Maybe I should have done options on this on Friday, but you know, this I really like this inside 60. It was below the VWAP, but the thing that scared me was so high above the VWAP, and it gapped up, right? So it definitely faded back in. And granted, I don't chase gaps, but you can fade them back in. But again, it sort of breaks the rule of being, you know, I don't like to short over the VWAP, and so so yeah, you could have faded that in. That would have been a great move, of course. I was looking just to short, and there was just a lot of action up here, right, in this range, and there was a decent short here. You could have taken this, you know, to the downside, right? It ended up closing here. But then look what happened. It opened here, it went all the way up to here, and never took out this bar. And so it's a bit of a guideline that I almost implemented. What can I say? I messed up this trade. I had too much size on it. My risk is because it was 15 cents. So, you know, you gauge your trade on 15 cents of risk. But really, the stop probably would have been safer here, right? And then, but you can't use 15 cents of risk. You've got to use now. This goes up to 26.82. So you've got to add 10 more cents. So now you're at 25 cents of risk. So what I should have done, honestly, scale down my size, and then put the stop here, I never would have gotten stopped out. And then look what happened short. So right, it triggered. If you held and maybe you could have trimmed some and just kept your stop there, or moved your stop down. Well, you wouldn't have made as much. Or if you just kept your stop there, right? Now we got stopped out here, and then boom, 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 boom. I mean, just like what a day that would have been. But and I just got stopped out by a little bit on that 15-cent stop right there. And then if I was 10 cents more, man, that would have been a 3-point move right there. But hey, you win some, you lose some. I did win a few. I had two good. I tried to call out where I was at on Amazon. Amazon was we were pretty bearish on Friday, so a lot of stuff was on the VWAP. Things were kind of drifting. So I shorted Amazon here. I used this inside bar. Obviously, the range here is 1647, but again, if you do 10 shares, it's only 164 bucks that you're risking. So you're here below the VWAP, short, stop up here, right? Look what happens here. So 1789 all the way down to 1757. That's 30 points. So even on 10 shares, right? That's 300 bucks. That's not a horrible day, right? And it gave you another chance too. And I called this out too. Both these trades worked. And normally I don't like doing an inside green, but everything was kind of going down. You're way under the VWAP, so it was worth a shot. The range of this bar was 1373. So you do 10 shares, it's only $137 at risk. You short that to the downside there, so the entry is 1760-ish, all the way down, so another 10 points right there. So just those two trades alone on 10 shares is 400 bucks, which is not a bad day, right? It certainly makes up for a 15-cent loss on AMD, right? So so that kind of summarizes those and kind of what Friday was like. So I'll be really interested in seeing how we open tomorrow. I mean, earlier, the Dow futures were down 100, what was it, like 140 or something? Anyway, now it's only down 50. So there's a chance we could open green tomorrow, but I would like it to be like this, like slightly red, so I could trade Goldman Sachs in the morning. Those are pretty much the game plan there. So yeah, that's kind of what I'm looking at right now. I posted a bunch of charts over the weekend. Obviously, every day I like to post the FANG stocks, and if I see anything else, I take a look at that too. I think I posted FedEx, looked at kind of interesting. It's really hard to tell what it's going to do right now. Obviously, the daily chart looks extremely bearish, right? So, I mean, why would I say that, right? So you have a, lower high, and this could be your lower low potentially. So it might go up here, which could be a trade either way because why? FedEx put an inside day, right? So, it's definitely worth watching. FedEx is a little tricky to trade because one, it's expensive, and two, the options get a little spready, and they jump around. So it's like you feel like you're up 20 cents, but it's only because the way they tick, right? So the way they tick up is like, see here, like it's a 20-cent spread almost on these, which is pretty tough to trade on ours. So the next set up, it's going to end up being, 325 to 350 or something like that. So you feel like you're up like almost 50% or whatever, 20%, 10%, and you're really not, because if it ticks back down on you, then boom, you're back down 20 cents again. So it's really going to move. So it's something to keep an eye on. I wouldn't necessarily recommend trading it unless, it's a little more long term. But I mean, if the market, oh, look at that. Oh man, look, the NASDAQ futures are green now. All here, live, right here, folks. So we'll see, man. I think it could happen tomorrow. So that's pretty much what I've been looking at. If anybody has any questions, take a few minutes here. I'm happy to take a look at any charts. If anybody has any chart requests or has any questions about anything I was rambling about here tonight, or just general questions about trading or anything like that, I'm happy to share any insights that I have, limited as they may be. But certainly, I was trading full time for a little while after I got laid off from my job, and but recently I did get a new job, so I'm kind of just trading through, mostly looking at the open if I have time, and then the key hourly time frames. So oh cool. What's up, Giovanni? Let's see. So the inside days, do you count the wicks? Any, or is it always just the body? No, yeah, I count the wicks. that forms the inside day for me. Some people work with, like you said, like just like the body theory, but for me, it's all important. Because someone's hanging at those wicks, right, somewhere, right? Somebody marketed in, or something happened where they top ticked it or bottom ticked it, and so somebody's there, right? Now they might have got out or whatever the case is, and so a lot of people do look at just the bodies, but I do the whole bar because it just gives I don't know, just from what I've seen, it gives a little oomph for when it breaks out, right? And besides, when gaps get filled, and gaps are significant too, right? They can get filled by the tick, and that tick could be a wick, so and those are key points to look at. So and that's why they're there, right? Otherwise the chart would just be just be dots, so it kind of shows you continuity and all that. So yeah, so when I count an inside day, I count the wicks. Although some people, like I said, sometimes they just count the body, to kind of show that, and they ignore the wicks. So, but yeah, I count the wicks. What's up, Max? Do you plan on playing any earnings this week? Okay, so just so you guys know, I'm a very conservative trader, right? If you look at my Twitter, rule number one is risk, right? And so I try to limit risk as much as possible. Now, it doesn't mean I won't do like a really cheap lotto into an earning or something like that if it looks interesting and the implied volatility isn't jacking the prices up too much. But honestly, I ignore it. Occasionally, I will trade after hours, and I'll watch price action to see, like, for instance, like PayPal the other day. If I go to a shorter time frame, let me show you. I was interested. Here we go. Here's our. So I watched it. I didn't trade it because I missed it. But a lot of things you could do rather than guessing which way it's going to go is you could trade it after hours if your broker will let you do it, right? And so now you have to use, in trade after hours or pre-market, you have to do limit orders. So you could get really screwed, right? You have to be really clever at it. Now, would you get as screwed as if you were short PayPal overnight and then it ended up way up all day? Yeah, no, I mean, so, but what you do is, and the trick I do for doing earnings after hours or pre-market is I look at the, and it's different now. It was like, I think it was like $4 or something like that. But anyway, if you use Thinkorswim, they have got your market maker move here. It's like $2. This is after earnings. I think it was like, actually, it was like $6. But you could also use the percentage too. So your implied volatility percentage before earnings to see essentially how much it's going to move, right? And so let's say here it closed that day. I think it was like $77, right? I think it was $4 or something like that. So what you could do is estimate top or bottom, 77 plus $4, right? So 81-ish, right? See, like 81 here, and then down 77 minus $4 would be like 73, right? So one thing I look at after hours is these whole numbers, right? So 74.50 even, right? That's for some reason after hours it likes to hit those to the tick, right? So if it were to hit 73, this one hit 74.50. That's kind of an indication. And then the earnings started coming out, and you could have hung out here for a little bit. You could have gone long, and but doing stops is really tough, right, after hours, right? Because it could blow through it and never pick, because you can only do limit orders. So you could keep going down, and you could keep getting screwed and trying to get out and out and out. So I don't recommend doing it either way, but you could do it. And sometimes it's sensible. This one would have made sense, but I missed this move. I didn't get to see it, to see how it did it, and it hung out here for a while and then went up. So after the, everybody said everything was good, on the earnings call. So once again, it was not really a gap and goer at the open. So, and it faded a bit, but it hung in there, and now they're linking up with American Express too. That's kind of some good news for it. So, I mean, it might be pretty positive overall for PayPal. But for earnings this week, right? There's a lot, and there's a lot coming up, right? So we've got, let me go back here. So, I mean, you got Amazon is on the 25th, so that's this week. But going into it, I'm not going to do it because you just don't know. It's gambling, right? And so the point is you have to know your risk, right? I mean, would you risk 20 cents to make $1? Maybe, but what if it goes the other way? Then you lose your 20 cents. So I'd rather do something I'm a little more consistent with, which is, trading off of the hourly indicators and the hourly time frames. Doesn't look what I traded PayPal on Friday. That was the other good trade. And props to TT out there. He was in this. He was calling it out. So, but I just kind of followed in. He was in it. He was short at like 84.40, and I was like, I'll join you if I get a good hourly setup, right? Because I will trade a reversal. And look what happened here on PayPal. You still make money on this without gambling, right? If you go in here and you're short, I mean, you're gambling, right? But here you actually have a consistent trade, right? And so PayPal gapped up, and the daily chart is nasty, right? I mean, it's nasty. And so if you the way this other trader was thinking is like, he'll short it and he pull and he bounce, right? And so that was definitely a bounce. And so here you go. So I was like, yeah, I'll try it. And look at, the market was pretty weak here. So here you had an inside 60, right? 90 cents of risk. Your risk. It's well defined, and you can get out. You can set a stop market right there. So my idea was, okay, I'll go in here. I'll short under the VWAP, right? That's my rule. Futures are pointing down, right? And so I ended up getting next month puts because I don't like to trade Friday puts on a Friday, or Friday options on a Friday. And then it ended up working pretty well. It was one of the better trades. It definitely made up for the AMD loss. So, but here, jump in options, it's going down, trim some, move your stop, and then boom, you made money. And then you don't even have to mess with it later. So that's what I look to do, right? And you could have done it on Netflix after it had its earnings, right? Let me go back if I can. What day was that? That was 3 days ago. Yeah, so the 17th. So here we go. This is the 17th, right? I don't know how easy this was, but it opened, faded. I was trying to see if there's any decent ways to trade this. It was tough to trade, but at least you can watch, right, and see. And then not to trade it if it doesn't give you a setup. And so, yeah, so I don't play, I plan to look at everything big that's going to be in earnings, but I'm going to look for setups, right, that make sense intraday instead of, gambling for overnight. So that's how I trade those. Good question, though, Max. Richie, what's up? When you trade options, do you cut your losses or let it go to zero? Great question. No, I mean, I never let anything go to zero if I can avoid it. Now, I traded Home Depot lotto ticket. I mean, if you're doing a straight lotto ticket, by the way, anybody got any lotto tickets for the $1.6 billion? Yeah, so when the hurricane was coming through, the last hurricane Michael was coming through, there was an inside day, and when it broke this inside day to the upside, I did get lotto ticket calls to go, and they were like the following weeks, and there I was thinking hurricane rally, didn't realize the market was just going to completely puke, and so yeah, those went to zero, and just is what it is. There was a chance here it went double inside day, and could have gone up, but you could see here, right, it fell to the upside, and so boom, after a double inside day, it's way down. So when you puts would have been better at that point, but yeah, so occasionally things will go to zero, and there's nothing I can really do about it. But if I'm trading intraday, that was just kind of like, I'm going to swing it and see how it handles the hurricane, right? And I thought it was going to go up, and it was just a gamble, and I missed it. But but yeah, if I were trading AMD, for instance, I did common shares on Friday, but if I were trading this, the way I would do it to be as conservative as possible is, let me show you. So here, right, this was the inside 60. So right, it was 15 cents. So what I would have done, right, if I were doing options, is I would have done 15 cents of risks worth of options. So I would have gone to the option area here, and look, you can see the in the money ones are about about $1.50, $1.60. So that's about 15 cents, right? Scaled up times what? Times 100, right? And so what I would have done is, let's say I would have bought in one put, or maybe done 10 puts, right? And then when my stop is reached, and this should have been the stop right here, then I would have punched out, right? Or I might have punched out at 15. And you're never going to lose your full premium that way, right? You're risking it. I'm saying, hey, I'll bet, $150 that this goes down. but I'm not going to lose the whole premium. And I'm sorry, I'm using big numbers if, no one wants to risk 1,500 bucks if that's a lot of risk. But just say 150, right? So you buy one put here, right? And you just, in this case with puts, you can essentially use mental stops, because your risk is defined, right? You got $150 you're risking. If you were doing shares, if you did 1,000 shares, you're risking 150 bucks, but if it really rips in your face, you need to have a stop there. Otherwise you're going to really lose a lot of money. But if you only buy $150 worth of puts, you're never going to lose all that money just on getting stopped out on a 15-cent bar. Do you see what I'm saying? So that's a great way to manage your risk and really scale your trades. And then you'll make money too. I mean, I think these puts, let's just say you bought $150 worth of puts on AMD on Friday. Let me see, what were we trading at? It was 26. I'm going to show you this real quick. Right, we do the put, and you'll see what I'm doing in a second here. So I'm going to copy this. I'm going to show you the chart of the put, and this is from the 26th, but I'm going to show you for the 19th, which was last Friday's. Okay, so look here. If you just traded the in-the-money puts, right, and you bought $150 worth of puts, essentially when it finally broke that bar, right, which probably would have been at, let's say this is hourly, somewhere around here. Let's just say this was it, right? You're at 21 cents. So you could have bought, let's just say, to make it easier, let's just say 10 of them. So you'd be at 20 cents, you're risking 200 bucks, right? Because, so you risk 200 bucks right here, right? If it ever stopped you out, right, and moved there, you could have just punched out and you would have lost. It's Friday, so this is, trading the Friday options is, little, you're going to get a little more theta burn, right? So at most your little loss looks like you would have lost, let's just say half, right? So you would have lost 100 bucks, right, on that one. But if you held it for the rest of the day, and keep in mind you had 10, you could have trimmed off anywhere. If you held it, it would have went up, I think it went all the way up to, it hit $2.37. So that's 10 times, right? So you would have made $2,000 on just maximum possible risk of 200 bucks. Do you see what I'm saying? You don't have to gamble or put a lot of money on the line. You could have made $2,000 on Friday with $200 worth of risk on AMD alone. And even if you got stopped out, if you're like me and got stopped out and missed that huge move, you would have lost on those puts. You would have lost at most by setting a mental stop here or here, because you could do that on puts, right? You would have lost at most 100, 150 bucks on it, right? But made $2,000, right? So yeah, if that answers that question. And so yeah, no, I try not to let it go to zero unless I'm doing like a swing lotto trade, and yeah, or any sort of lotto, like into earnings, which I don't typically do. But if something I just feel like betting on something, I might bet like literally like 20 cents just to see if I can make 50 cents, like literally, 20 bucks to make 50, just something silly like that. But a lot of times I don't even do that, because who likes to lose 20 bucks? I mean, nobody, right? You want to win as much as you can is the point. So hopefully that was a good illustration there, trading options on AMD. So to make to make 10 times like that. Hey, what's up, Dave? Do you think low will bounce back? Yeah, I mean, I think everything will eventually. But because the market is, these are all good companies, right? But now, what's the market doing and what's going to do short term? Let's see. So you can see here, let's actually take a look, because you guys, it's important to look at all your major time frames, right? So look at your monthlies, right? And you have to understand that moving averages, right, correspond to other moving averages, right? So they're just multiples of each other. So if I say a 10 MA, right, a 10 moving average on the monthly, right, there's 4 weeks in a month, right? So so your 10-month moving average is like your, is like your 40-week moving average, right? Your 40. So there's all a relationship there. But anyway, yeah, real nasty month so far on low. It could get, you've got, the 8 and the 10 right here, it could find that as support. And if you look at here on the daily, now you're looking at the same thing, that 200. So it could find some support there, right? And if you look at what it's done in the past, you know, just historically, it's definitely hung on to, this is a 250 day, but it's definitely hung on to that 200 and 250. And then, you know, like you said, now here, it chopped for a while, and it doesn't mean it can't do that either. It could chop here, and then it bounced, right? So, so definitely is a possibility of that, right? But you also got to trade, if you're just trading day trading, you know, I mean, just look at what it's doing, right? It's here on the daily. Let's take a look at the weekly real quick. Yeah, see weekly, look, your 5 MA is about to cross over the 10, and that's really bearish, right? This is the ADX, the DI plus and minus, right? So you're in a downtrend, right? And so here, you're looking at the 50, it looks like it's staring right at that, right? So chances are, right, you know, you're leaning bear, and then here it pauses and then could hit the 200 and then bounce. You see what I'm saying? So that's definitely a possibility. But when you see like moving averages train tracking like this, you don't want to go long against that until there's some sort of indicator. Now you can test it at the 200. You can try to go long there, but in the meantime, I'd rather, you know, look to see if you could short it, right? Or see what it does. You know, just trade the price action, right? So here I wouldn't even trade it at the open because you got this inside bar. I tried to break it to the upside at the end of the day, Friday, failed, right? And then came back inside. And so now what's it going to do? I mean, if it goes long over the VWAP, yeah, it would be the break of sort of a greenish kind of shooterish type thing, but it's really tough to trade at the open. So what I would do is look for signals, right? But yeah, on this one, it's tough on the hourlies just because you can see how it trades. This would have been a good one here, inside 60 shooter under the VWAP. So that would have been good for 100 all the way down to 99. So wait, hold on, was that low of, no, 101 all the way down to 99.67. So, you know, 1.5 points right there. But low is weird. I tried that the other day. I did that and target simultaneously. I think I announced those trades, and gosh, those target calls worked so much better than the low calls, and both were moving up. And low just was like just the way the spreads were and the way it moved. Just yeah, see, the spreads are just kind of a little nasty, and target was way better. But yeah, I mean, I would if I were going to trade this, I'd look for a bounce. I would look to see what it does around the 200 day. So that would be how I'd look at it. All right, great questions tonight, everybody. I really appreciate it. It's 10 o'clock, so I gotta get going. I appreciate all the questions tonight. Obviously, I'm going to save this. You can go back through it, and of course, I'll be on Twitter through the day. So feel free to shoot questions either through a comment section through YouTube, because I check those, or go ahead and you know, shoot me something on Twitter, and I'll be happy to take a look at a chart during the day or something like that. And I'll do my best to call out what I'm looking at intraday. Again, I've got a full-time job, so I'll only be able to do it during breaks. All right. Thanks, guys. Have a good night, and I will see you tomorrow.